Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is June 7th, 2022, and I'm coming to you again for the second time for the Tuesday live stream. Welcome one and all. This is why we do what we do, okay? We struggle and slog, and we show up every day without sort of missing anything. We show up every day consistently. We do our analysis. We trade. We fail. We get up and we do it again. We get up and we do it again. We get up and we do it again for moments like this, okay? For moments like this, watching something pump to Valhalla. That's the shit we love to see, okay? I'm looking at reserve rights right now, just pump and pump and pump, right? Let's make some money. Let's get rich. This is why we do what we do, right? I'm in it for the tech. I'm also in it for the tech, but I'm also in it to make a bunch of money. And I love this shit. I absolutely love this shit. Look at this pump. Watch it. It's literally, I mean, if you can, hook myself up to one of those machines, that you can see, what is it, an fMRI? You can see the parts of my brain lighting up, right? The pleasure centers and all that stuff. It'd be a freaking light show right here. Because I love this shit. I love green candles like this, okay? There's nothing better. Even catching a big short is not as nice as watching an organic pump after months and months and months of pain. Look at this shit. I mean, I didn't buy anywhere close to here. I actually bought the bottom on this one, okay? I'll tell you when I'm underwater. I'll tell you when I bought the middle or anything like that. This is one of the assets I actually bought the bottom. I've been in profit ever since I pressed the buy button here, okay? That doesn't necessarily have to be the case for it to be a good buy, okay? Let me dispel that myth of all of my investments. I bought the bottom here. I bought the bottom here. I bought the bottom here. I bought the bottom here, but for Ravane and Kadena, you all know I did not buy the bottom, but I'm still good, okay? I bought close enough to support. This is what you see in reserve rights right now, what you can expect throughout the market. This is exactly what we've been waiting for. And this is a crazy thing about trading and investing, right? You're doing all this work for one little moment. That moment in this time that I've been talking, right? Sorry, let me go to the hourly chart. In this time, okay, we prepared, or maybe months. I didn't prepare months with reserve rights, but I've put in years of training, years of analysis, years of charting, years of falling on my face to be able to read these charts, to take advantage of one such opportunity, so that in the span of less than an hour, right, we can pump 50%. This is why if you want to be a good trader, in my experience, it's not about the timing. You don't know when, and you don't have to know when, right? Like the idea of using your fib time trend-based, the fib time zone and trend-based fib time, it's just for play, right? Maybe there's somebody out there, I don't ever discount this, there's probably somebody out there that can use these accurately, and by accurately I mean with a high enough probability to prove it's not chance, right? And they're able to time the market perfectly. But besides trying to time it, you just buy simple support, and you wait and you wait and you wait and you wait until something like this happens, right? So that pump was gratifying. That was great. But again, it's just the beginning. Let's go on the weekly chart. Look at where we're at, okay? This is what you're dealing with. If this is indeed a move up and out, okay? Let's go on log scale, because to accurately or faithfully represent these moves, you have to be on log, right? But let's say this is, one of the bottoms, a macro bottom. You can expect this to continue up for quite some time, okay? So this is a macro bottom that you just bought. And so you just wait and wait and wait and wait until you reach significant resistance, not just in your momentum indicators, right? You want your K and your D lines to go into oversold territory, but you can also look at the structure of this pump. After days in and days out, you can start to make out some waves, and you can start to use that and corroborate that with what you're seeing in your momentum indicator. But look at this volume. I mean, this is the shit I've been talking about. Like, this is why I always say good analysis is hard sometimes. If you don't know anything about technical analysis, you don't know anything about charting, it's hard to ascertain good from bad, right? Because there's something about time frames. And if somebody's been saying ever since, here, I'm getting ready to buy support, they will have been right, even though we experience one more drop. Laddering into buys from here wouldn't have been a bad idea given this support, right? You're buying on support. That's what you're supposed to do. But this was many weeks ago, right? And if you look 4, 5, 6, 7, 8, almost 2 to 3 months ago, if you listen to somebody talking about, I'm looking for areas of support, and the stochastic RSI is completely oversold, they will have been right. But some people will say, they don't know what they're talking about because the price has gone down significantly since they said they were looking to buy, and that was the better trade. You have to think about, if you're scalping, that's a terrible call. But if you're swinging or you're positioning yourself for a bigger move, and that's a great call. You should start looking for longs at this point, okay? Obviously, I'm talking about reserve rights now because reserve rights is pumping, but you can use this as an analog for anything else in the market, okay? Do your own research, right? Don't just, this YouTuber made a good call, so he must be good or she must be good. No. Use your own discernment. Who's calling for buying on support? Who's calling for selling resistance? They can be right, and, they could get one little call correct and make some money, but that's reckless. That is absolutely reckless. Because you're on support, so even if you do get something right, you're liable to have something like this happen. Look at this. I want to show you guys this, and in a second I'll just see who's here. But I'm hyped. I hope you're hyped too. Look at the market. We're gonna go through. We're gonna have some fun today. We're gonna make money today. We're gonna watch our money grow. We're gonna watch the market pump. This is the kind of shit I love. This is the kind of stream I get hyped for, right? We put in the time and the work and the energy, and we've grinded through all of these corrections, consolidations. Like, let's enjoy this, all right? So here I'm on CoinGlass, and you already know I like to come here to check out open interests. And open interests, basically, a lot of our market in the cryptocurrency market is based off of people making bets, right? Just like the rest of the world, people in crypto love to bet. Who knew? And we bet on the price going up or down, right? And the interesting thing about open interests is that you're not just betting by spot, right? You're leveraging. For instance, I have 2 leveraged positions open now, one on ADA and one on reserve rights, okay? So reserve rights, I borrowed money, and in Cardano, I borrowed money to increase my position size. So let's say I put in $100, just for instance, put in $100 of my own capital, and then I borrowed 5 times that, 10 times that, 12 times that on leverage, right? And said, okay, make my $100 $1,000, or make my $100 $1,200, and let's bet on the price going up. So when it goes up, I gain more, but when it goes down, I lose even more than I would have lost had I just held it because I could get liquidated. Okay, so that's what open interest is. If you know you're subscribed to the channel, you'll know I look at these sometimes, and look at what we see here. So exchange liquidations, you basically everybody's getting liquidated right now. Everybody calling for 20k Bitcoin that doesn't know how to read a chart and doesn't know that things don't go down in a straight line, go up in a straight line. It's getting liquidated right now. People shorting support getting liquidated right now. I am not. Let's be clear. I am never, ever, ever, ever going to root for another trader to fail. I've been that trader. That's just whack. There's no reason for me to do that, right? I hope every trader eventually figures it out, right? It's gonna take some doing, perhaps, but I'm all for helping traders and not necessarily rooting against traders. I don't see the point. It doesn't make me feel better as a person or as a trader. But I'm just saying, you short support and you gotta kind of eat shit, And I've been there. I've been that guy, right? All this time, holding support, holding crucial sort of Fibonacci golden pockets, not breaking the 618 every single time, going down, creating bearish hammer candles, and you're shorting that. Okay, so this is what we get. This is it. And for those of you who don't know, on CoinGlass you can get really specific. You can look at different exchanges, right? Different current, like Bitcoin right now. Where's Bitcoin in terms of open interest and historical liquidations? People getting liquidated for these sums. Somebody just lost $41,000, and that's nothing, right? In our business, but it's something, right? And you can look at the size. Who just lost $1 million? Okay, somebody just got shorted, or somebody just lost $1.17 million worth of Bitcoin because they were short. Do you see what I mean? You can look at all of this stuff. It's just interesting. There's a ton of money in this space, but this is how we make so much money so quickly. It's a lot to do with open interest, the ability for us to leverage trade, right? To increase our position sizing. Okay, so let's go back to the charts because that's what I'm most interested in. And I love seeing this pump in reserve rights. And I love seeing the pump across the market. Okay, like I said, I'm also in a leverage position in Cardano. So let's let me first see who's on here and say hello. Let me not be rude. Give me one moment. Give me 1 second. Just go see. And I hope I'm streaming. I didn't even check if the stream was streaming properly or not. I'm just so excited. Say hello. Okay, here we go. Yeah. Rosalie's. Yeah, Rosalie's, I remember, bought into reserve rights. Yeah, excited. I love this stuff. Yeah, don't forget to like the stream. Shout yourself out if you're here. I'd love to say hello. And okay, we're good. So yeah, let's look at Bitcoin because this is the market leader. This is what butters, or what's the expression? Butters are toast, or fuck, I don't know. Bitcoin is the main market leader, okay? I apparently don't know how to speak English either, so I'm not going to try. All right, let's see. So Bitcoin, sorry, 1 second. My windows are a little funky right here. All right, here we go. Bitcoin is looking good, okay? This is the weekly chart. And I've looked at the weekly chart before. Butters our biscuit. Thank you, Nicholas. What's up? So we've been saying for weeks now, that we're looking for long positions in Bitcoin. We are at macro support, right? We don't think that we have much lower to go, with respect to the risk reward. It's just a better bet to go long, okay? And actually, we were saying that over here. I was saying that over here, and I actually got into certain positions like Cadena, like what else did I get into? Cadena and Ravane. I started laddering in over here, okay? I didn't buy 100% of my position over here, but I started laddering over here. So I have certain buys over here, and that's fine. Don't have to be perfect. The perfect is the enemy of the good, okay? And I know for some of you who trade and are perfectionists, you'll have a tough go at it because it's going to be hard to buy the exact bottom on every single one of your positions. You don't have to do that. You just have to buy more or less a support region. Even that, if that support region is not the absolute bottom, maybe wave 4, maybe wave B. Here I bought the bottom of wave B. We went up and then back down. It's all good. I have some positions I bought at the absolute bottom, just like I told you, and some positions I'm like here. But still here, look at the risk reward. I'm risking this much, I risked this much, and my reward is likely this much at the very least, or if not, a little higher, because we all know it's very likely that Bitcoin can break this to the upside before pivoting and coming back down. We have the absolute high of the price action being the phi ratio at 104K, okay? So on the weekly charts, we're looking great, not good, great, okay? Here's what I'm waiting for, and I've said this before. So in terms of candlesticks, this week looks excellent. Excellent. This is exactly what I needed. I had 1 week showing strong buy pressure, basically below this region. You see right where we are right here, below this region. People were not interested in selling. People were more interested in buying. That's why you get hammer candles. That's the fundamental reason why you get this type of candle, okay? And then the following week, the same thing. Buyer stepped in. Buyer stepped in. It's a buyer's market. Fewer sellers than buyers, okay? And then you got here and you got a big move up and then a consolidation or a retest of this level. That's fine. This week is the breakout. This candle right here on the weekly time frame is the breakout. And if it is indeed the breakout, we need volume, okay? On the high time frame, you should see volume. Now, having discussed Bitcoin on the large time frame, weekly time frame, and looking at what we can expect to see, look at something that's already broken out or may have already broken out. Reserve rights. Granted, you can expect more positive price action, so this volume candle isn't yet finished, right? This is a weekly chart, so it takes a week for one of these suckers to form. So I expect, if this is indeed a breakout, that before Sunday Eastern Standard Time at 8 p.m., this candle will grow. Okay, that's what I'm anticipating. If by Sunday this doesn't change, that's not a breakout. I'm anticipating some more downside, right, before eventual upside. But if we do indeed get volume, then I know almost for certain that this is my breakout. This is the start of my impulse, okay? See, I like the fact that I got volume here. If I got volume here, it's likely that I'm getting volume here. Okay, so that's what I'm seeing on the charts. What I want to do is also show you the fear and greed index. Okay, and we've seen this before. If you don't know, go to lookintobitcoin.com. Sentiment analysis. You all know that I'm big on I'm big on technical analysis, but everything can be to your advantage, right? I don't necessarily do sentiment analysis, but I use it as an extra data point, right? Something to corroborate my reads, okay? Typically, if I'm buying major positions, I want to do it when people are fearful. I want to buy the fear. I want to buy it when people hate the market. People say Bitcoin's going to zero. People think that it's a scam. People think that we're going to zero, right? We're in extreme fear on the fear and greed index. Anything between 0 and 25, it's a 15. I'm so happy. I've been buying and buying and buying every group chat I'm in. If you're in one of my group chats, go ahead and confirm this. Every single time somebody in my group chat said, "Oh damn, I just sold my position," I'm like, wow. I just would sort of quote tweet it and say, "I bought more." I wouldn't tweet it, but you know what I mean. I would quote what they said and say, "I bought more!" exclamation mark, and I would leave it at that. Okay. I bought more. I bought more. I bought more. Anything bought into fear, especially at support, both fear and support is perfect. And looking at this chart, I love this chart because it combines both your technical analysis and your fear and greed, right? This is showing you support and it's showing you the inflection, right here. You're getting some inflection, a change in the market price action, right? And you're in complete fear, extreme fear, going back up again. And I'm going to look to sell once we get green, once we get to the top of this range, right? So rinse and repeat. You buy the fear and you sell the greed. I am not going to sell until we get closer to greed, closer up into these regions, okay? So it's just another way to look at, our overall analysis, right? Now, let's go throughout the market and let's have some fun. Let's, throw out some coins, throw out some projects. Let's just admire the beauty of green candles on small time frames, on large time frames. Like, we deserve it. Like, we've been looking at crappy, consolidative, choppy price action for God knows how long. So let's now look at some nice impulsive moves to the top, okay, to the upside, right? We have Energy Web token doing well with a nice pump. We have Happy, that's an Oracle, kind of like think Chainlink, but made by white hat hackers. So Chainlink, but with built-in security, right? Cartesi, that's a layer 2, right? Link doing really well. Nice strong candle with good volume. I mean, just great. And nothing's really broken out. Just as I said this morning, we may get breakouts, but this is just the beginning, as I said yesterday, because you don't even have the volume here. And a lot of these, like Bitcoin, they're at their necklines, okay? If you go into smaller time frames, let's go on the daily real quick. Look at this. I love this candle right here. This candle makes, this is everything right here. This candle is everything. Look at that daily candle. Look at that buy pressure. Went all the way down. People were saying, you have articles. People write articles, right? They're, experts in technical analysis and, other quote-unquote Twitter experts in price action saying, I told you we're going to nothing and Bitcoin's breaking down, and look, we retraced all of yesterday's gains, right? They're focused on price, not price action. In just a few hours, whatever that retest was, hit the main, just as I said this morning, hit the 0.5 to 618, the golden pocket, bounced right up, and ever since then, that's been, so I think it was this morning, yeah, or late last night that it bounced up, but it's pretty much put in everything it lost yesterday. So 7%, and it's about to give you more. And look at that candle. Like, imagine how bullish that, I've never seen a more bullish candle. That is an extreme wick. And that just shows you how many people, you could see it in the open interest, got liquidated, got faked out because they're more concerned with the small time frame sort of volatility and trying to trade little things when you have a macro reversal, and you've had a macro reversal, you've had ample time to recognize it, yet you've been messing about calling for scalp shorts, right? That's just amateurish. And call it what it is. Are there any other projects that anybody wants to look at that aren't on my hey Steve, what's up? that aren't on my watch list, right? Because I talk a lot about Ravane, right? That's one of my... Let's just go down the watch list. And if you have anything you want to talk about, just let me know, right? Look at this. Beautiful, right? Falling wedge typically breaks up and out. Nice daily candle. We're on the daily time frame. I'm not messing around with the 5 minute because I don't need to, because we understand that this move is a large time frame move. Okay, we've been talking about this and looking at this, scouting it, hunting it for a couple months now, maybe more months, right? We've known about this, or the possibility of this, for months, and it's finally here. And if it plays out like we think it will, then this is the start of a lot of upside. Not just 1 day or 2 days, but many weeks, okay? Nice bullish candle on the daily time frame, okay? Breaking a falling wedge. I mean, this is textbook. Up, you go down, retest with a falling wedge, and boom, you break out, okay? Double digit, like I've been saying, double digit gains. And here's where you walk away. You bought in May and you walk away. This is what you walk away on. Do not financial advice, but this is financial advice. Be smart and get the hell out of the way. Look at your charts once in a while, but disappear, because you want to let these play out. Even last night's retest would have been premature to sell, okay? But I can understand people getting spooked by that. But you want to just hands off. Had you gained positions in May, it's unlikely in any asset that you would not be in profit right now, because May, right, was down here somewhere, right? If you were laddering in May, right, you were laddering in here, right? You're already starting to break even. You're going to be in profit. That's why we were saying buy in May, walk the hell away, right? For pretty much most of these. Telcoin, this is one that I bought at the bottom. I'm in slight profits, but I'm waiting for my big payday, yeah? Same thing, like I said this morning, breakout, retest in a beautiful textbook falling wedge. These tend to break up, I think, three out of 4 times, right? 75%, 70 to 75% of the time, something like that. Somebody correct me. If you want, go on Chartopedia, Investopedia. They probably have the figures. But it's all about context. I don't even look at those figures, because I think it's more about context. If I'm getting a falling wedge on support, that's all she wrote. I'm not even asking questions. I'm buying. I'm a buyer, right? Falling wedge, and I zoom out and I see that we're on support. Any support, either structural support or a Fibonacci support, and obviously the 618 here is Fibonacci support. You see that? Your golden pocket, 0.5618. Some people will extend it to anywhere in this region as well, 618 to 786. This is mathematical support. You breakout, retest, mathematical support here, falling wedge. I'm a freaking buyer all day, every day. That's easy money. That's easy money. But it's not easy for an impatient person, somebody who needs it to go up immediately. Do you see what I mean? You see how this works, my friends? I hope you see. It takes patience and conviction, and I have this written down on my board. I wish you could see it. I have a little whiteboard in my office, and it has 3 words, and that's essentially the crux of my strategy, of my trading strategy, of my investing strategy. It goes patience, perspective, and planning. You can't be patient if you don't know what you're waiting for, okay? Or else you're just being patient for no reason. Maybe you're being inactive. You can call patience inactivity if you have no perspective. But given our skills in the market, being able to read, right, our chart literacy, we gained some perspective and we formulated a plan built on that perspective. As such, we could be patient for this to play out, right? And what do I mean by that? The breakout. This is what we've all been waiting for. That's it. That's simple. And I have another thing. It's actually start. It's the first phrase that I have on my whiteboard. It says, keep it simple, trading is easy. Okay? Trading is easy doesn't necessarily mean I haven't suffered and I haven't made a ton or every mistake you could possibly make, lost a bunch of money trading. Right? I made a bunch of money, I lost a bunch of money. Trading is easy basically means it's easy if you let it. You buy support, doesn't necessarily have to be the absolute bottom, but if you wait for a high time frame move to play out and you let it play out, then you win the trade. Rinse and repeat. But what's your investment horizon? What's your time frame? You see what I mean? If you're in a hurry, what you're going to do is you're going to buy on leverage. You're going to over leverage yourself. You're going to have your stops above critical support. Probably going to get stopped out, lose money, get frustrated, do it again, vicious cycle. It's all starting from your impatience, your inability to be patient and wait for that move. Reduce your risk, let it play out, give yourself some space for the trade to actually materialize. Do you see what I mean? So trading is easy, but most people make it hard because they want money now, like that commercial. J.G. Wentworth, 877 cash now or something like that. You know, people want their money now. All right, so that's enough with Telcoin. Cadena, talked about it this morning. Same deal, almost exactly the same thing with Telcoin. And if you don't see these patterns, really, I don't know what you're looking at. A lot of people, like I've said before, they don't know when to use log and when not to use log. If you don't use log, for instance, you have no idea that we're on mathematical support. You have no clue, right? You're looking at this price action, you're like, well, it's just going down. I guess it can go even further. I guess it can go negative, right? But if you know when to use the log scale, you turn on your log scale and you see that you're on mathematical support and you have your falling wedge, it's an easy buy. It's an easy buy. It's hard to lose money on any of these trades if you can wait and watch them play out, right? So that's Cadena. Reserve rights, yay. Broke out. Let's remove this because we don't need to demonstrate that anymore. It's playing out, right? Same thing, except with reserve rights, you don't have the full chart. So you may have had something like this here. Okay, perhaps, maybe, we don't know. And this may have been your 3 waves down. You know, your wave 2, your primary wave 2 correction. Okay, so I'm looking at reserve rights, and one of the reasons I invested in reserve rights, technically speaking, so fundamentally it's legitimate, but technically I liked the chart on a smaller time frame. I liked the fact that you were already getting volume, so I knew that this was a major retracement because of that volume, because after the volume you see a spike, or because of after the retracement you see a spike in volume. I know that you're re-establishing a main trend. Okay, that's like a little technical, but that's how I read this chart, even though it's incomplete. Okay, and I was like, this is part of like reserve rights is one of those things that I took on leverage, and I was like, I'm gonna take it on leverage because I'm gonna risk a little to make a lot, and I think that we're at mathematical support, so I know exactly where to put my stops, if any, and I hit them way below the 618, and so far so good. That it's been making it's been doing very, very well. So I didn't invest much capital, but I leveraged, and I've been saying you don't necessarily need to leverage much to make money in this market when you recognize an up-only market is coming, but I've taken a small percentage of my capital and invested on leverage and reserve rights and Cardano. The large majority, maybe 95% plus 98% of all of my capital is on spot, lower risk, and it's tied up in spot positions, okay, various spot positions in this list right here, okay. So just to put leverage in context, because you don't want to fuck around with leverage even if you're confident in your reads, especially when you have an opportunity to make money, a lot of money, right, without even needing the leverage, right? That's just silly. I just did this kind of for fun and kind of like as like a side money thing, right? So that's reserve rights. That's how I traded that. Dodo, same thing. It's amazing what you can see when you zoom out. A lot of people don't zoom out. If you know, you're looking at somebody trading or charting and they never zoom out to the weekly, never zoom out to the daily, they're always stuck on the smaller time frames, maybe they're successful in scalping. But the problem is they may be successful during the times in the market where you're just going up and down sideways, right? Up and down and sideways. But then when the big moves come like this or the big moves come like that, they get caught unawares. You want a bit of both. You want a mix of some regional awareness and some kind of universal awareness where the market's likely to go. So Dodo, I read much the same as reserve rights. I really liked the big volume candle showing me that even though I don't have any information on this part of the chart, you know, this is a truncated chart, I'm assuming that whatever this is, it's a major correction, right, to what probably would have been, maybe it didn't exist here, but what would have been a large increase, and that the next big move, since this is following a large market leader, probably following Bitcoin or, not Bitcoin, but it's following some sort of altcoin pattern that we're seeing. The next big move is an impulsive move up from here. Okay, so that's how I read Dodo, invested in Dodo down here. That's one of the ones that I bought on the bottom, at the bottom. Okay, Cardano talked about this is exactly what it is. This is one of the few investments, or this is one of the few charts that we have here that's closer to complete. Okay. Here you have your completed 5-wave move up. That's your impulse. You have 3 waves down. You take your Fibonacci retracement tool. It's just like it's in the books, you know. Wave 2 retraces to between the 0.5 and the 618 on average, right? Minimum 382. That's exactly what you got. Look at that. Zoom in. You see this? The low for Cardano was right here, 40 cents. 40 cents right here. That was right breaching the 0.5 Fibonacci retracement. And then you started your reversal pattern there, and you seem to be completing it and breaking out up and out of your reversal pattern. Just like a lot of these other assets, you're at a neckline. So in the next 24 hours, don't be surprised if you get a pump in Cardano, just like you got in reserve rights, just like you're going to get throughout the market. It's going to pump. You know, these things are going to pump. And I've been saying this for quite some time. And, you know, some people don't like the fact that I can't get the day right. But it doesn't matter. For those of you who know anything about this market, anything about this business, you know, you just have to get it. You have to be approximately correct. You start building your positions, right, around these times. You had 1, 2, 3, 4, 5 weeks to build the bottom. People say it's impossible to catch the bottom, impossible to catch the top. You had 5 weeks. You had 5 weeks to catch the bottom. It's not impossible. And if you say it's impossible, it's going to be impossible for you. You just set limits on yourself. Like, you just look at it, right? It's right in front of you. It's anything but impossible. You just have to see what, you know, make sense of what you're seeing, okay? And are you always going to get it right? No. Sometimes you may get caught in one of these, okay? And if you follow this channel, you're subscribed, you'll know I've been caught by wave 4 corrections so many times. But it isn't the end of the world, okay? It isn't the end of the world if you recognize a wave 4 as being, or you think a wave 4 is a bottom and you get faked out and there's one more wave down. It's not the end of the world. It is annoying, yes, but it's not the end of the world. But even if you had built your positions in Cardano over here, that's still a great buy. Because what is the next target? Major target, okay? Very simple. You project wave 3. So if this is primary wave 1, this ABC flat correction is primary wave 2. Your wave 3 target on the bounds of probability is $113, okay? So once again, if you're in a rush, if your investment horizon is small, then I'm sorry, can't help you, right? Can't help you. But if you have a little bit of time, a little bit of patience, a little bit of perspective, and you can formulate a good plan, even if you started laddering in over here, you're very, very well off, even though you're currently underwater, because the next likely target is 14,000% away. All right? So this is how you do it. This is how you beat the market, and on high probability. It has nothing to do with getting your calls 100% right. It has nothing to do with trading every day. It's about recognizing these macro trends. And when you're in the smaller trends, right? And I talked about this, the three phases of the market, right? The sideways market, the down market, and the up market. Okay? There's essentially three phases of the market. If you can recognize what major phase you're in, okay, and you recognize that for the next coming months you're in a small range, and you're scalping, but you're not scalping, your whole net worth. You're just scalping a small amount of your income, and whether you win or lose, you don't really care, because at the end of the day, you're waiting for these big moves to play out. Here, maybe you enter a short. That's when you get paid. And then here you enter long positions. That's where you get paid, and without even using leverage. That's how you play this. But you got to be patient. You have to have perspective. And there's no way to gain perspective without zooming out. I don't care if you're a scalper. I don't care if you're a swing trader or a position trader. There is no way to gain perspective as to what the market's doing without zooming out. And even then, you have to have the skills to be able to read what these waves are doing, and what's likely happening. Not everybody can do that. Yeah. So that's pretty much my watch list. I know I never talk about EOS. It's because, and I'll tell you, one of these exchanges gave me like some promotional money, and there was nothing else to buy. It was on Voyager. Okay. There was nothing else to buy, so I literally just bought EOS on spot with whatever they gave me. It's not much at all, and that's the only reason it's on the watch list. And I'm looking to sell it once I have enough to make sense. It makes sense to sell. Okay, sell it and then convert it to something else, right? So that's why it's on the watch list, but I'm not particularly interested in that project. All right, let's see if anybody has any questions. Chainlink, Steve. Oh yeah, Theta. Okay, great. All right, so let's do Theta first, because MM was talking about Theta before. So let's add this. Actually, let's go to our general list right here. I love it. Nice and green. Well, to be honest, without the red and chop, this doesn't mean anything, okay? If our market was perpetually green, we'd all get bored. It's special, and it's nice, and it feels great, because it's not something we always experience. All right, Theta. And then we'll do Link. Okay, so let's do... Looks like we already have... Let's organize by symbol. And we see Theta. Where the hell is it? Did I get rid of it? I probably got rid of it. Let's see. Okay, yeah, I did get rid of it. Alright, Theta. Alright. One thing I like off the jump is that I have increasing volume, okay? Volume's increasing as I'm completing this move. This tells me two things. First thing it tells me is that this red volume candle right here is likely capitulative, meaning that it's signifying the end of a trend, okay? And I won't be surprised if I zoom in. We're going to do that in a second. I'm going to zoom in, and I likely see 5 waves in here, okay, signifying the end of a trend, okay? The second thing I like is that the following green candle, weekly candle, was also very strong. So that signifies a resumption of the main trend, right? Do you see, as you were dumping, as you were bleeding, the volume is increasing, but then comes to a head and then starts to tail off. That tells me that whatever this trend is likely complete, just given volume analysis. That's rudimentary volume analysis, okay? Don't know for sure, but that's just like my at first glance, what I'm seeing. Okay, let me also just double check to see that there isn't a more complete chart on another exchange. I wish there was some way to see which chart was most complete without going into them. Yeah, see, for instance. So I'm going to get rid of that, and I'm going to revert to the Binance chart, okay? And so immediately I look at this and, I think of Cardano. Why? Because I see 5 waves in the prevailing trend, the larger trend right here. And we all know, according to Elliott wave theory, that impulses happen in 5 waves. And that actually changes my volume, my read on volume. Okay, so I see 1, 2, 3, 4, 5 waves here. I see that's a clear wave 2. Okay, I see that was wave 3, most likely. Wave 4, that's probably my wave 5, okay? And what I'm going to do is I'm just going to corroborate this wave count with my Fibonacci extension tool, okay? And I don't like it. And for those of you who know anything about this, you already know exactly why I don't like it, okay? I'm on the log scale, so this is something that should be read on the log scale because I'm trying to fit something that was under 4 cents with something that was priced at $14 on the same chart, right? On the same screen. So I need the logarithmic scale for it to make sense, okay? So I'm correct in being on the log scale, but I do not like this 5 wave count for one reason and one reason only. Does anybody know? Can anybody tell me why as soon as I pulled my Fibonacci extension, I just, something's off about this? It's the 3rd wave extension. It's much too short. We know that wave 3 extends to a minimum of the 1 Fibonacci extension or a maximum of the, well, there's no maximum, but on average 1618 to 2, okay? And so that tells me one thing, that maybe this count is off and my wave 1 is probably down here. Either wave 1's down there or this isn't what I think it is, okay? So those are 2 things that it may be, okay? So let's just assume, given that, I don't know how useful an exercise would be to try and confirm this 5 wave count. Let's just assume that this is impulsive. Okay, I have decent volume here. Okay, during the course of this move, I have volume here, I have volume here, I have volume here. Let's assume that this is an impulsive move, okay? Not necessarily knowing the count, that's fine. Okay, know what you don't know. I'll categorize that as that. And then I'm going to pull my Fibonacci retracement from the bottom to the top here. And, okay. See, this chart, I said the volume profile's changed. On the previous chart, the volume profile seemed to be capitulative, right? It seemed to come to a head. Here, I'm not so sure. And here, notice, those 2 weekly candles, they haven't gone green. They haven't produced significant volume, okay? That may be because it hasn't happened yet, or we're just not yet there, okay? So I'm gonna look at this. I see that using the Fibonacci retracement tool, a minimum of the 382, minimum of 382 of retracement has been reached. So This is a valid retracement, okay? It's not what I see in Cardano or in some other assets, Cadena, where I'm hanging out at mathematical support, right? And there's unlikely to be any more downside. But technically, this can be satisfied because the 382 has been met, okay? A wave 2 382 retracement is okay. So I want to go into this more. I want to jump down into the daily and see if I can't see a little more detail. Okay. So I'm going to look at this and kind of look at the dates. Okay. And we've been going down since March of 2021. And I'm just going to have a peek at Bitcoin. Okay. The market leader. And see what happened in March of 2021. Let me go to a better Bitcoin chart. This is so March of 2021, Bitcoin was at the top. It just hit the top. Okay, so this essentially tells me this theta drop started here and it ended here. Okay, so this is one of the ways I do my analysis. Obviously, I use Bitcoin as a proxy for the cryptocurrency market at large. It has the most dominance, so everything follows Bitcoin to a certain extent. If theta started dropping in March of 2021 and never did any of this, it's likely, here's what's likely. The fact that it's gone straight down since March of 2021, that's a long time. Okay, it didn't put in any waves to the upside, no B waves kind of making higher highs like Bitcoin did. That's a straight 400 days of negative price action. So just looking at the timing, it's likely that is a sufficient and complete retracement. Okay, so this is how I use it. Like, you have to think about it. Like, in a market where Bitcoin was going up and down and ping-ponging between support and resistance, but was correcting, theta was also correcting, but there was no up, right? It was just straight negative price action. And now, here it is. I was like, where is that? So March of 2021, this may be a complete correction in and of itself. And what we have here, for me, this looks like an A wave. I'm just going to do this by hand. 1, 2, 3. I see a flat correction there. I see an elaborate B wave. A complex B wave right here. Okay? So these corrections come in different flavors. You just have to be able to read them in you see similar patterns. So here's my A wave right here. And this is my B wave right here. Maybe a W, X, Y perhaps. A WXY perhaps, a complex correction here for your B, okay, and then my impulse to the downside, 1, 2, 3, 4, 5, okay, this is what you call an ending diagonal. No, wait, hold up. Yeah, it's likely to be an ending diagonal, okay? It's likely. I'm not exactly sure, but all I know is that this, to me, looks very clearly like an impulsive move. This isn't easy to read, okay? But it's not exceedingly difficult to read, right? You see enough of these, you kind of seem to make sense of it. One of the reasons I'm leaning on the idea or the fact that it's an ending diagonal and not a regular 53535 is the proximity of your wave 2 correction and your wave 4 correction. Your wave 4 correction is pretty much abutting your wave 2 correction. You don't have that in a regular 5-5 impulsive wave. Does that make sense? I hope you're getting this. So for me, this is an ending diagonal. So let me just once and for all label this. This is what I'm seeing with theta. Okay, ever since March 21, you get your initial break of structure, your 3 waves down. That's initiating your downtrend, okay? And as we know, because I repeat this all the time, that initial break of structure targets wave 4 of the previous trend. That seems to be wave 4 of the previous trend, yeah? Or thereabouts, okay? So you get your initial break of structure, then it's followed by a B wave that I think is a double 3 combo, WXY, right? I'm seeing right here W. I'm seeing X is a compound right here, right? This flat correction right here is X, and then Y, probably an ending diagonal Y here, but an impulse nonetheless, okay? So that's what I'm seeing for B, and then C, like I said, I'm seeing an ending diagonal, which is a 3-3-3-3-3, okay? And so I'm seeing, here, let me turn this on, 1, 2, 3, 1, 2, 3, for wave 2, 1, 2, wait, 1, 2, how does this go? Oh, yeah, 1, 2, 3, sorry, 1 second. Oh, sorry, yeah, I'm reading wave 3. Okay, 1, 2, 3, boom, wave 3. 1, 2, 3, wave 4, boom. Yeah, it works geometrically as well. When you talk about ending diagonals and leading diagonals, sometimes you get this symmetry right here. Do you see that? That's what it is. That's what it is. I'm never 100%, but very likely that's exactly what you got here. Yeah. And this is an advanced read. This is not something that, you just pick up, your Elliott waves made simple and you start charting these moves. You can read necessarily. Maybe some people are really talented and are able to read this, but with a little bit of experience, you will have seen this a few times, and that will be, like the first time I saw an ending diagonal, I did not at all recognize it, and I could not read it. But for me, at this point in my career, having seen these in action, having seen enough complex correction, double 3s, triple 3s, this is my read. This is why I would say that theta is complete. And if I zoom in, this move right here is a complete, it's likely to be a complete reversal pattern, okay? And you know what I mean when I say reversal pattern. Initial break of structure, okay, a wave A, and then a B wave right here, okay, and then a pivot, an A, B, right, C. So in the pivot right here, I'll just change that color. In the pivot right here, I'm getting a 5-wave move, a 3-wave move, right? And that 3-wave move is most likely holding the golden pocket of that 5-wave move, okay? And you see that right here? You see that? Right here, you see, you have 5 waves here, okay? And you get A, B, C, just like you got in Bitcoin. You're holding the golden pocket, and your next move is 5 waves up. That's the start of your impulse. So that's a complete reversal. I'm seeing theta being on the bottom, okay, by my reads. Again, you're never 100% correct, don't know, but this is my most likely read for theta. Okay? Guys, if you're getting value, don't forget to like the stream. All right, now let's look at Chainlink. Let's look at Chainlink. Yeah. Hold up. Let's see. I'm gonna read the other comments in a second. All right, let me just go to Chainlink and then I'll get into Nicholas's comment and Jay's. Okay, so Chainlink, link. And Link is one of those projects that I think is going to do relatively well, given that it's really underperformed. It's really underperformed. It's been down for so long. Let me try to get the best chart I can possibly find for Link. Okay, this one, Coinbase, is probably the best one. All right, let's get rid of the... I think I already added the other one. All right, here. Okay, so Link, you can clearly see. Let's go back to the weekly high time frame. This is unambiguous, right? And this is what I love. You know, you do all this study of all this theory, and the more you read, the more you do this analysis, the more it's confirmed that it's just not some nebulous idea that some guy wanted to put in a book 100 years ago. You see it time and time and time again. You see 5 waves in impulses, right? Again, I don't know what the read is here. I don't know what the count is here. This wave 3 seems a little short. There may be some truncation here, meaning this may be the end of the actual move, right? So that may be not wave 1, but that may be part of wave 3. Do you see what I mean? But all I'm saying is that even in this small thing, you can see increments of 5. You know what I mean? Like I think it's beautiful. Anyway, this to me is unambiguously impulsive, okay? And I see that reflected in the volume somewhat, okay? Now, again, I think that it's proper to analyze this on log because you're looking at something that was valued at 14 cents as well as something that was valued at $35 on the same chart. So you need to be on the log scale, okay? That's the first thing a lot of analysts don't even know how to do, right? People paid money to do analysis and, you know, they're publishing charts and stuff like that. Then you want to take your fib retracement tool and you can see that this retracement has been in since May of 21, okay? And just like we did with data, let's try and get an idea what was going on in the market in May of 21. And to do that, again, you look at Bitcoin. Like, if you know what Bitcoin was doing at that time, you kind of have an idea of what the market was like. If it was going up, if it was going down, if it was in a B wave, if it was in impulse, whatever. So May of 21 was here. We were in that Wyckoff accumulation, right? That was the summer accumulation, right? So we're basically ping-ponging on support. But prior to that, we had started our initial breakup structure for this flat correction, for this minor 2-wave correction. So, okay, we have the context, right? We had our descent all the way down to 30K for the first time, and then our 2 or 3 months consolidation. Got it. Or was it 30 days? I don't know. How long was this? summer months, I always say. So it must have been, oh yeah, it was 60 days. 60 days. Okay. All right. So back to link. Yeah. To the bottom. Okay. So we have the context. So May, Bitcoin did this same thing. Put in an initial breakup structure. So did Link. Okay, and here again, you see this all the time. Again, it's not just theory. The theory is your initial breakup structure targets wave 4 of the previous trend. This is a 3-wave move, right? Very clearly, 1, 2, 3, right? Flat correction, and this is clearly a consolidation. Must be wave 4 of a 1, 2, 3, 4 ending diagonal right here. You have. Right? That's an ending diagonal. This is a wave 4. This is clearly an ending diagonal. There's no buts about it. That's wave 4. Your initial breakup structure targets wave 4. You see it. The more you see it, the less it's just words on a page. It's just theory. It becomes your lived reality. And then you can't miss it. You don't have to remember anything because you live it. Do you understand? That's why there's no substitute for chart hours, for experience, for just looking at chart after chart after chart after chart, analyzing it, making sure you have your fundamentals down, you know your basic rules, your fundamentals, and then applying them on chart after chart. I guarantee you, it'll be like riding a bike when you're doing your analysis. So let's change the color here. I don't like mauve in this context. Let's do this. Okay, great. So that's my initial breakup structure. This is very clearly here my B wave. This is my counter. This is my, okay, I put in an A wave. I want to put in a 3-wave structure that's counter to that. That's what I see here. Okay. So that's my B wave. So 1, 2, 3, 1, 2, 3. It's retraced at least to 7, 8, 6 of this. So it's textbook flat correction B wave. And so everything from here on out are my 5 waves down. So I'm expecting to count 5 waves here. So let's do that. Let's see if we can count 5 waves. Then I would say the trend is complete. That's 1, very clearly. 2, right? That's within 618 of this initial drop. Looks like I'm getting, again, an ending diagonal. Okay? And I'll tell you why. So you see 1, 2, 3. That's a 3-wave move, right? 1, 2, 3. That's a 3-wave move. Okay, I'm expecting 3-wave moves and corrections, but in the impulses, that tells me that it's 3, 3, 3, 3, 3. Likely, okay? So I'm looking for 1, 2, 3. I'd have to probably zoom in to see the 3-wave move in this impulse, but it's very likely that this is complete. 3-wave moves, and that was the capitulation, and it's telling me it's the capitulation because I'm counting 5 waves, okay, and I get this super bullish hammer candle. That tells me if it comes at the end of a trend, that it's most likely capitulative, meaning it's the end of that move, that downtrend, okay? The second thing is, and I've noted this already, when you zoom out and you take your Fibonacci retracement tool, and again, we don't know that this is the entire move, but let's say this was let's say that this was the entire move, okay? Let's say that this was the entire move. We don't know for sure, but let's say it was. We've at least hit the 382 Fibonacci retracement level, which tells me that this is potentially a complete move, okay? So this is what I'm seeing on that chart, and I'm getting, once again, an ending diagonal, and I'll tell you why it's an ending diagonal. Most likely, more than likely, is because you see wave 4 is abutting wave 2. You only get that in these ending diagonal patterns where wave 4 is so close to wave 2. In the 5 through 5 through 5, you're more stretched out. You see what I mean? You get wave 1 here, wave 2 here, wave 3. Put some distance between wave 2 and wave 4. So given that lack of distance on wave 3, it's telling me that it's likely one of those ending diagonal moves. Again, a 3, 3, 3, 3, 3. You know that your leading diagonals are 5, 3, 5, 3, 5. Okay? So that just goes into your knowing your fundamentals, you know? And then you have to know them first before you scout them, before you spy them, and then try to read them. But I'm getting something like this. Okay? And so this, to me, if I'm paying attention here, I'm at probable or possible mathematical support. Okay? And I zoom in, and I see, once again, a completed reversal pattern. I'm not going to get too in the weeds with it, but initial break of structure targeting wave 4 of the previous trend, a counter to that A wave in a 3-wave move, which is a B wave, a pivot, an A wave, a B wave, retracing at least 0.5 of that A wave, okay? And then an impulse where I would get in some volume, and that's exactly what I got right here. Do you see that? I mean, boom, you see that? And up until that point, I had not gotten volume, and the only other time I got volume was at this capitulation. So you see how some indicators can corroborate your reads. You have your reads, and then you have indicators not doing the actual work for you. And what's the work? The work is reading price action. If you can't read price action, and you're only relying on indicators, you're setting yourself up for some difficult times, because indicators will tell you a small part of the story. They sometimes can tell you the whole story, but it's hard to it's hard to know when the indicator is kind of off, or no indicator's perfect. What you want to do is be able and very comfortable to read price action, use indicators to corroborate corroborate your reads in the price action. And when you just have a read like that and your indicators are telling you the same story, then your confidence goes through the roof that you're reading it correctly. Yeah. And you don't need many indicators. Volume should be one of your main indicators, because most of these indicators that people use are using volume, right, in their code, and basic things like momentum, like RSI or stochastic RSI. I think everybody should know how to use some of those, right? You talk about your MACD. If you break it down, you have volume, stochastic RSI, and other basic sort of primary indicators in those indicators, those super indicators. So that's just my 2 cents on it. So yeah, this is what I'm reading in Link. And in terms of targets, just like I said before, if you go back on the larger time frames, it's a little harder in Link because I don't necessarily know if this is a complete 5-wave move. It may be a bit truncated, but you're looking at, given the fact that you've been in this correction since May, right? And you've come down so far. When I mean by come down so far, I mean that you've really broken the plane of this initial break of structure. You see how Bitcoin, it hasn't really broken the plane of its A wave. Our A wave in Bitcoin came down to 30K, right? We're still around 30K. That tells you that that correction is incomplete, because we haven't really broken the lower support of that range, okay? But in Link, like in Kadena, like in a lot of these other projects, you broke the plane of the range and you've hit, maybe not exactly, but you've come close to hitting targets to the downside that were actually, that wasn't accurate. The range is like over here, right here. Okay, this is the range, right? That's more accurate. Would everybody agree? That's the top to the bottom of the range. Superimpose that from the side of breakout right here. You know, you've pretty much hit your targets to the bottom. That's why I think that these corrections are finished. Just doing basic pattern analysis, looking at the height of this range and superimposing it from the side of breakout, you can see that your target's more or less been met, okay? So I would say these are complete macro corrections, and I anticipate Link, Kadena, what's the other one? Telcoin, to give you targets well beyond the phi ratio of this A wave. Again, the phi ratio is the 1618 or the 618, but in this context, I'm referring to the maximal B wave retracement, right? This is not like Bitcoin. Like, all of this is not an A wave, and then we're putting in, actually, sorry, this is an A wave, but all of this is not a B wave, and then we're putting in a sort of the impulsive wave of the C wave, and then we're anticipating a move back down. No, this is the complete correction, okay? And you can prove that to yourself just mathematically. If you take your Fibonacci retracement tool from the top of this A wave, or from the bottom of this A wave to the top, you'll see that it's impossible that this be an A and all of this be a B, because the 1618 has been broken to the downside. I hope that makes sense. Again, all of this stuff that I say, there's a component of it that, you know, is a little bit more subjective, and you can say, well, it doesn't look like this, it doesn't look like that. And then another part of it is just straight math, right? And if you pull out your levels, the math should be respected. Your phi ratios should be respected, okay? And they typically are. Okay, looking at Jay. Hey, Dean, May gains a little late to the party. Yeah, May gains a little late to the party, but they're here nonetheless, right? And again, we're not too concerned with when, you know, we're patient. If you're not patient, you've already sold at support. I know people. I'm in groups, in chat groups, where people sold 2 days ago. They sold positions. Imagine that, selling positions 2 days ago, given what we're reading in the charts. You're selling support. You're basically, I don't know, you're throwing away money, right? So we're okay with May gains being late into June, because a lot of these big moves happen in such a short amount of time. Like, just like I showed in reserve rights, in an hour, you may have waited months and months, but then you basically pump 60% in 1 day, and then in an hour, and then for the next week you know, maybe you pump 600% or 700%, right? It works like that. It's not like it's spread out over a long period of time, and you know, because I waited for the market to correct for, you know, 300 days, the pump's going to also take 300 days. No, we all know that. Impulses, by definition, are impulsive, and they happen quickly. So these pumps can happen fast, and instead of timing them, we just have to be well positioned to take advantage of when they happen. Yeah. So MM says, Theta 4 hour daily, weekly, anytime, please. I think I went over that. So Nicholas says, to be honest, I'm trying to grasp the potential of the low cap coins, Tel, VRA, Rivain, to hit such highs. Is it legitimate to assume that the logarithmic trace moves them out of micro cap status? Depends what you consider or define micro cap as. You know, some people say anything with a market cap of under 50 million. So I don't really know. I don't really care. What's important to me is that they hit the targets that I want them to hit, and then I take profit, whether they are micro cap or medium cap or whatever. You know, I'm not a VC. But that being said, everything's going to correct. So even when they hit their targets, they're going to have, let's say that's a wave 3 target, they're going to have a wave 4 correction, and then they go down some, right? Just like everything, you know, has a cycle. there's a day and a night and the spring and a summer and a winter, right? Expect cycles, a dry season, a rainy season. So after it goes up, it's going to go down. Does it go down all the way back to where it started? Not necessarily, but it's going to go down somewhat. And it's going to hit its targets. Just like things go down 95%, 98%, they have the ability to go up a lot as well. So, are there any more questions? Let's see. Let's see. Golden Death Cross is a nice indicator. Yeah, it doesn't really matter what indicators you use, to be honest. Like, you can use any indicators. You can use sentiment. You can use EMAs. I used EMAs quite a bit, earlier in my career. And there's nothing wrong with using EMAs. Absolutely nothing wrong with using EMAs. It's just, fundamentally, you want to be able to read price action, to use them in concert with what you're seeing on a larger, with your price action, right? So if you can only use EMAs and you're just looking at, death cross and, EMAs or MAs, right? Moving averages or exponential moving averages. There's benefit and a drawback to using all of these things, right? The benefit of being able to read price action is that you're able to read something in real time. Volume, it's in real time, right? Moving average indicators, whether exponential or not, they're lagged somewhat, right? So, yeah. Any indicator is fine, but I think indicators should be used in concert with your skills in reading price action. But a lot of people don't know how to read price action, especially on large time frames, right? While a lot of people have gained the ability, the skills to be able to read short time frame price action and scalp the market, some of these people don't know what to do on a large time frame. So they can't even tell you that a large move is coming because they wouldn't know. For them, a downtrend is a downtrend, and it's not until it only changes when it changes. So for them, they haven't prepared taking positions. They're not even ready to take positions. They don't know any of that. For them, it's just a downtrend, and the trend is your friend until the end. So for them, in their minds, everything's a downtrend until it's not. And that's fine, but that's just a limitation of that way of reading the markets, of trading the markets. Anything else? Yeah, I mean, I'm just stoked, enjoying the gains, right? Things are going to pump and retrace. Pump, retrace, consolidate. Pump, retrace, consolidate, right? Just leave it alone. Had I known that, I didn't know any of this, and I made these mistakes, and I'm happy I made these mistakes. I lost a lot of money making these mistakes, right? Because I would chase, I would do this. I'll tell you exactly what I did. It's the silliest thing. So I would go in TradingView or CoinMarketCap, and I would look here. Let's just do this. This is what I did, just so maybe somebody's doing this, and don't take offense. I made these exact same mistakes, and I'm only mentioning it so that maybe you're spared the learning curve. Okay, so what I did earlier in my career, I would go on CoinMarketCap. All right, I try to get clever, and I was trying, and I actually appreciate my effort. Even looking back, I'm glad I lost the money because I'm gonna make it back and then some, if I haven't already. I would go to top crypto gainers and losers. Okay, I would also go into my watch list. I would add all the tokens and the coins that I was interested in TradingView, and I would arrange it by the top gainers, and I would try and chase gains. So you know how people say don't chase gains? I would say the biggest movers are what I'm chasing. So I would try and go to these technical indicators, right? I'd use these indicators because I didn't know how to really read. I'd see, oh, this is a strong buy. Okay, I'm going to put some money in that. And I'm just going to wait. Or actually, you know what I would do? Would I do that? No, I would look for the opposite. I wasn't that silly. I would look for what was down the most, I think, or something like that. I don't remember, but I would do something. My strategy was built around trading in and out of coins. So I like see a top gainer. I think I would do that. See a top gainer, I'd put money in there, and I'd hope it continue. I would hope the trend would continue, and I would look on this sort of top gainers and losers. I look for the tokens that ran the most, that I could actually invest in. They were actually on Coinbase or KuCoin or wherever I wanted to invest. And I wouldn't do any fundamental research, no nothing. I'd just look at, the percent gained, and I'd say, okay, looks like this is moving. I'm going to try my luck, and I'm going to invest in Revoluto because that's the biggest mover. Okay, I'd put money in that and cross my fingers, and a lot of times, what would happen? Guess. it would reach, basically it had run its course, and it was in correction. And as soon as it started correcting, I was like, damn it. I got annoyed. I took my money out and I tried it again. Sometimes it would work. Most of the time, it wouldn't. That's literally the best way to lose money in the market. It's like, it's not trading. I don't know what that is. But that's what I would do. And I'm not surprised that a lot of people do that, right? So yeah, don't do that. Don't do that. Just buy support, sell resistance. That's why, being able to read the market, read these charts is very useful, because you don't know when it's going to pump, but it will eventually, and you'll be there for it. And you don't have to sell prematurely, especially if you notice a larger trend. You just ride the entirety of the trend, and including the minor retracements in between the pumps. So yeah, that's pretty much it for me. Anything else from anyone? Please like up the stream. Say what's up if you haven't yet. Subscribe if you've gotten value from this analysis. And yeah, just hope now's not too late. Everybody here has built positions in the market for long-term sort of profit, right? Because if my analysis is correct, this is just the beginning. We can expect a few weeks, at the very least, of positive price action. And, day on and day out for your favorite altcoin to go 50, 60, 70%, that compounds into quite a bit, okay? So if there's nothing else, I will end the stream. My friends, have a great rest of your Tuesday, and great luck in this market. I think we're going to make it. I think we are going to make it. All right, take care. See you tomorrow. Bye.